Hi guys, welcome to Trading in Zones. Today, just got an idea for an interesting video. I'm really not sure why I didn't bother making a video on this particular topic, but today is the day, and I thought it is worth doing it because tomorrow being a May Day, or rather today being a May Day, as I'm doing it pretty much at around 2 a.m. in the morning. I thought this is a great video. I'm sure this is going to be one of the great videos, and I'm so excited about making this video at this point in time. One is because I never thought about making it, and two, this idea just came to me now that I should actually spend some time making this video. I will make this video in multiple parts so that you can continue watching this, and I will make this video into a series of videos where I will try to cover the entire of candlesticks and the candlestick patterns which I've read through in one of the books. All right. And this is one of my most favorite books. I think I spent predominant amount of my time reading this book multiple times over and over again until I came to a stage where I, started envisioning all these candlesticks. So let me reveal the topic. Yes, you heard it right. I am going to make a series of videos just on candlesticks and various types and forms of candlesticks and how you can pick them up. All right. One of the key thumb rules on to any one of you who are listening to me, I would sincerely request you to watch most of these patterns to start with on a daily or a weekly chart, though you might be a day trader from background, because I know predominantly people are into day trading, and would sincerely request all of you day traders, especially the new generation folks who are entering market with high hopes, please start with this basics. Somehow I've missed this all this while, but it's never late, or rather should I say it's better late than never. I'm making this video and I hope it's gonna help all of you. So long ago, when I was struggling as a trader and I was really wondering where and how I should start trading, what I should learn first, what I went or where I went wrong rather, and how I wanted to make things up from a technical trading perspective, because I was always a good investor. I was able to always identify good companies which are going to give good results, and I was able to do good from a long term perspective of investing money and holding those particular stocks over a period of time and make money over a period of time. And mostly I was a defensive investor, and I always invested in known well performing companies over a period of last 7 to 8 years. So I started investing between 2007 2008, and most of my investments went really well till about 2012 2013, where I saw significant amount of profits which I made on my investments. The only difference was that 2007, when I started investing very small, I just took some bare minimum stocks like Vijaya Bank, Canara Bank, and stocks like that. And mostly when these stocks fell and the market crashed in 2008, I kind of added them and eventually ended up making a lot of money on them over a period of time. But however, today's topic is not what I did on investment. Let me come back to the topic on candlesticks. So Japanese candlesticks, where does this come from and what is the background? All right. So today I'm just going to start with basic, and this might be a very small video for about 5 to 10 minutes maybe. I don't know how long I'm going to speak, but we'll try to keep it short for the first video on this series. But I'm going to go through this entire book, so for anyone who's going to watch these videos over a period of time will be able to associate with the entire book and would save significant amount of time compared to reading the book. I also have iBull Finance open on the screen at this point in time, so that as I talk I will try to explain some of the basics through different charts. Obviously today I've opened iBull. As I make the next set of series of uh, videos on this particular topic, I will have more different charts from different stocks as much as possible, so that I can cover different patterns at the same time, show you different stocks to keep it interesting. So Steve Nissen's candlesticks book, Japanese candlestick book is the first book which I technically read. So for me, this book was, I can say, life changing. Uh, I saw a lot of different kind of naming conventions for the first time in my life. I started hearing things like Morning Star, Hanging Man, Dark Cloud Cover. It was very interesting and intriguing for me to understand what these are. All right. Though I came from a statistics background, I had never gone into technical stock analysis into stock market. So all these candlestick stuff was something new and something very exciting for me. And as I started learning these patterns, they revealed much more than their symbolic names. They displayed that trader's most important signal, that of price trend reversal or change in direction, actually happens. And when they happen, they make significant movements. And if there is anything which can give you a real good statistical edge on your trading, it is price action and there is nothing else. If there is a holy Bible or a holy grail of stock market, it is price action and nothing else. And I say that with great confidence because I've been using it for quite some time and I solely depend on it. So I'm sure these set of videos are gonna help you as well. So I soon found that these storytellers on the book helped me assess the stock price pattern rapidly, helped me understand a lot of other indicators much better because I was able to read the price and the price action with a high degree of accuracy. All right. So I felt that Steve Nissen, who wrote this book, made a big change. I think it was published sometime back in 91 or so, or maybe earlier. I'm really not sure. Because this was a technique predominantly followed by Japanese rice traders centuries ago. All right. So, absolutely no idea in what year this was founded, but Steve researched and made a book out of it, and he did a fantastic job for every aspiring technical trader. He made a holy Bible, a holy Bhagavad Gita, or a Quran, or whatever you want to call it, the Vedas, whatever you want to call it. This is the base of the candlesticks. All right. There are many other chatting platforms. I'm sure some of the experts who follow on Heikinashi or some other pattern, etc., might vouch by what they have learned about them. But majority of the traders, majority of the trading platforms do follow price action or candlesticks, in other words. All right. So let's look at some of the basics today and then go forward from there. So we'll go with some amount of introduction, we'll go with some amount of different combinations of candles as we go into different chapters. So for today, this is the first chapter. So let's understand what is a candlestick. All right. So candlestick is actually a price movement based on time. Okay. And the price movement based on time is divided into four parts on a particular candlestick. So let's understand what those four parts are first before we get into candlesticks itself. Okay. So what we need to understand is the scale. Now, once you understand that the scale of the chart is set to daily, so this is a 1 day chart. That means each candlestick represents 1 day's price movement. Okay, so that becomes your x-axis. So each candle is a particular day. So you can see this is 5th March and the next one is 6th March. Okay, and then you can see on the right hand side of your axis, you can move the axis. Different chatting platforms, you might have it on right or left, wherever you have it, it really does not matter. What is representing here is the price. Now from the charting platform, what one of the most important things which you get to read is the four parts of a particular day, which is known as, so for example, if I point this particular candle, I would want you guys to focus right at this particular point here. Okay, so this shows O, which is open, high, low, close. which is known as open, high, low, close. So as I point on a particular candle, just give me a second, let me remove these lines to avoid confusion. I'm not going to save these charts because these drawings are very important for me, and in some of my earlier videos I've shown you how candlestick support resistance are drawn, though I've never made a basics video, and this is the first one. So here is open, high, low, close. So this becomes OHLC data. Now as I point towards a particular day, what it says is on that day the price opened at 725, the high it made was 788.8, the low it made was 725, the price closed at 783. Now how do I interpret this? Is the 3rd of December, so I will go back to 3rd of December, so it's easy. I've just tried to kind of zoom in a little bit so that it becomes easy for everyone to read. Alright, so this is the particular day. So let us zoom into this particular candle. Okay, so let's understand this particular candle. So it says, when I point towards this, it says the price actually opened that day. The open price was 725, which means when the market opened, the price at which it started trading was 725. Okay, and then it made a high of 788. You can see the scale on the right hand side as I'm moving the cursor. So I would want you guys to focus on the scale here, okay, and then focus on the values which are coming up right over here. Okay, so this is the day. So as you focus on the right side scale, you will very clearly see the high it made is around 788.8, which is also seen on this particular bar which is plotted, which might look pretty much like a bar chart, but we do see some black lines on top and black lines which might come at the bottom as well if there is a low created. At times the open and low will be the same, or a close and a high might be the same, and vice versa. We will have a look at it and we will talk more about it. So from a basic candlestick perspective, what one needs to understand is this is a day where the market opened, or the stock started trading at 725 and it started moving up. So on this day the price moved from a value of X, which is 725, to a value of Y, which is 788. So there is a significant amount of movement which has happened. So from a candlestick perspective, this is plotted in a very interesting way. It is plotted in a green color box, and the green represents a price which opened lower at 725 and a price which closed higher, okay, at 788.5. 788.8, which is high, and 783.05, which is the close value. So what it is saying is that when a particular stock started trading at a particular price, and over the period of that day, as the price moved up, and by 3:15, 3:30 when the market closed, it closed at 783. So on that particular day the price moved up. So if someone bought the stock as the market opened and someone closed the stock as the market closed, would have made a significant amount of profit, or rather would have made a profit from 725 to 783, which is approximately about 50 rupees. If you take into if I'm considering 785 as a close, okay. So it's a significant amount of movement for a stock which is worth 700 rupees, right? So from a percentage perspective as well, 50 rupees movement on a 700 rupees stock is approximately around 6 to 7%, right? So 725, so 7.25 rupees is 1%, which makes it approximately about 6, or maybe little lesser than 6, right? Between 6 to 7% approximately. So that's a kind of movement which is made in a single day. So it would have made significant amount of movement. That would have been a good profit for any person who's trying to buy and sell. Now, from a candlestick perspective, you can see this square box being drawn and it being in green color. So the price opened at a point and price closed at a point, and the high which is denoted here is actually denoted by a small black line on top, which is known as a wick. Okay. Similarly, on days when the candle was green, you might see a small wick at the bottom happening as well. That means the open and the low might be different. For example, here if you observe the top column where we were seeing OHLC value here, if you observe here when I point here, you will see very clearly that the open was 771.7 and the low was 769.05. So it actually went below the open price and then it has started moving upward and eventually it is closed up. So whenever we see a open and a close where the price has moved up over a period of time, you will see a green candle and a wick being created when the high is different from close. If the high and close would have been the same value, then you wouldn't see a wick, right? Similar to how you don't see a wick here because it opened at 725 and the low is also 725. It did not make a low after it opened and it continued to move up. It made a high, but while closing it has slightly come down and closed at around 783.05 instead of closing at 788.80. Okay, so this is nothing but a candlestick with shadows or wicks. There are different words used. Some people call them as wicks and some people call them as shadows. So this is a candlestick and a green candle represents the price moving up. The same phenomena, if the market opens at a certain price like 769 approximately it is opened, 770 it is opened. If you see the top side as I point the candle where we were seeing OHLC value, you can see the OHLC value right there. So what's happening here is that it is opened at 770 and the price has started moving down and it made a certain low of 726.50, but however it closed with a slight retrace at 733.35. Okay, so though the price has moved down all the way from 770, you can also see it made a slight high of 771.55. So about 1 rupee 55 paisa it is moved up and then it started moving down, which turns into a red candle. Alright, so this gives you a basic idea of how the price is plotted on a particular chart and how you can use different time frames which are available here for you to identify whether the price is moving up or whether the price is moving down. So this is the first video for today, which is just giving you a basic understanding of what the candlestick is, right? And then how a green candlestick where the price is moving up and a red candlestick where the price is moving down, and how the shadows or the wicks are created when there is volatility. So on a particular day, you will see that the low and the open might be different and the high and the close might be different. Okay, so this is the first video. We will make more such videos continuing on the Japanese candlestick patterns. This is just an overview for you to know how and what the candlesticks are and how is the data being represented. Okay, thank you for your time. Keep following this series to learn the basics. This is for all the newbies who are getting into stock market and who are getting into technical analysis. We will make a series of videos which will have more details coming through. Take care. Have a wonderful May Day holiday.